Monday, June 19th, 2023, Monaco 64, home of alternative economics and contrarian views. So recently, the focus has, of course, been on the debt ceiling, on many other things like the Federal Reserve. And I think it's important that we revisit the Taiwan situation. I think that's very serious. And it's a risk that could be massive. It could make the war in the Ukraine, what happened last year when Russia started its military operation, whatever you want to call it. It will make it look like a picnic, the prospect of some kind of conflict between the United States and China. I think it's interesting that we cover that today. Before I start, though, I like to give a shout out to my affiliates, precious metals dealers affiliates. If you're looking to buy gold and silver, all the details are below in the description of how you go about it. And also, I'd like to give a shout out for the special that Glint has. And it's valid up until the middle of July, July 14th. And if you use the Monaco V50 referral code, you get 50% off vaulting and insurance fees for the next 12 months. So if you're thinking about opening a Glint account, this could be a good opportunity. So back to Taiwan, the US, and China. And over the weekend and today, Secretary of State Blinken traveled to China. He was supposed to have gone in February, but then you had this balloon incident, and he canceled this trip. And it looks like things are getting a little better. At least people are talking to each other, and that might be a good thing. But one comparison I will make to what's going on is the Munich Agreement. So a year before World War II kicked off, it looked like things were great. They met in Munich. There's an agreement. The Prime Minister of Britain was there, Neville Chamberlain. All the major leaders of Europe were there. And then 1 year later, the war kicked off. And I'm not saying there will be a war with China vis-a-vis Taiwan, but I think it's a big risk. And it's not just me talking about this. There's an article today in the FT talking about it. An opinion piece, of course, by Leo Lewis, and he says how Hong Kong's multinationals and global funds are preparing for the worst. Corporate contingency planning in the territory will be a litmus test for assessment of China risk. I'm not going to go through the whole article. I'm going to put a link to it below in the description if you want to read it through archive.ph. This is what he says here. The worst case scenario that most concerns him centers on China, the US, the ambitions of Xi Jinping, the aggressively tight consensus in Washington, and the fate of Taiwan. Things may yet calm down and leadership summits may diffuse tensions, but for now, at least, the hostility feels irreversible and the divergence permanent, an alarming combination. So I don't have to tell you how important China is for the supply chain around the world, for goods and services that they produce. And we saw in 2020 when there were lockdowns that there are a lot of things that the Chinese export to us that are used in producing final goods too. Really, really important. One example I'll give you is rare earth metals. I think China produces most of it, like something like 90% of rare earth metals is produced in China, and many other things. China is a huge producer of silver, and we spoke about silver the other day, about the fact that there could be a supply crisis coming soon. This, of course, would accelerate it. What's this? Well, it would be a crisis, some kind of conflict between the U.S. and China. It would be huge, of course, because of Taiwan. And I was going through a Reuters article that just came out, and it says Blinken Wang tackle tough issues as possible Xi meet looms. So they're talking about here the fact that it would be significant and a good move if Xi Jinping gives Anthony Blinken a bit of time to meet him. If not, it's the kind of thing that gives a good impression, right? They're not sure yet whether Blinken is going to meet Xi Jinping. If he does it mean the tensions are over? Not one bit. We saw with the Munich Agreement back in 1938 what happened. And it says here, U.S. Secretary of State Antony Blinken discussed Taiwan and other thorny issues with China's top diplomat Wang Yi, in Beijing on the final day of a rare visit aimed at preventing friction between the rival powers from spiraling into conflict. Again, I'm going to put this in the description. You can read it. This is what the Chinese said here, Wang. We must take a responsible attitude toward the people, history, and the world, and reverse the downward spiral of U.S.-China relations, Wang said during the meeting with Blinken, according to a statement released by China's foreign ministry. And this is what he said on the issue of Taiwan. China has no room for compromise or concessions, according to the Chinese readout. So, I think it could be a cover, as I said, for intervention in the markets. And what do I mean by that? Well, it would be pretty much like what happened in 2020 with lockdowns and that crisis we had back then, where the central banks just like flooded the markets with funny money, where rates were cut to zero, where governments intervene fiscally. So this could be a cover. It could give a good reason, and it would be because of national security. So I think we need to keep an eye on this, and I will keep an eye on this closely, the China, Taiwan, U.S. situation. So with that, let's quickly look at where the markets are this morning. It's 8:30 a.m. London time. So we got spot gold, 1953. It's down about $4. High's been 1960, and the low's been right around here, 1952.81. So we're off a little bit here this morning. A spot silver is at 24.04. That's down about 15 cents or 0.6%. The low's been 24 and the high's been 24.27. The stock market index futures, they're pretty much unchanged, so I won't go through them. The currencies, sterling is down slightly at 128.11. The euro as well is down a little bit at 109.25. Dollar is unchanged versus the yen at almost 142. So the yen, of course, is headed south. It's one of the worst performing fiat currencies we've seen in the last 20 years, along with the British pound. And those are the major fiat currencies I'm talking about. The dollar yuan is up 0.5% at 716.50. To the other currencies, we got the Aussie dollar down 0.2%, 68.64. We got the dollar and change versus the Canadian dollar, 131.88. And the Kiwi dollar is down 0.25% at 62.22. Quickly go through the commodities. WTI crude is down 0.7% at 71.40. Brent is down the same in percentage terms, just below 76. Platinum is down $2, trading around 985, and high grade copper is down 0.5% at 387.50. We're gonna quickly go through the bond markets. We start with the gilt market. Well, we got the 2-year gilt yield trading at 5%, which is not a good sign for the housing market, especially in the UK. For mortgages, we know that 1.4 million mortgage deals are coming due for renewal just this year alone. So yeah, we're right near the highs here in terms of yield. And I think on Friday we did get above 5%. So no respite for the UK gilt market, and unfortunately for homeowners who have mortgaged themselves and have a problem on their hands. US Treasury market, we got the 10-year yield unchanged at 378. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.